Hi, welcome to today's episode on real estate talk. Today we shall be considering valuation techniques, valuation process, and the importance of accurate and transparent reporting. Valuation techniques are various ways and methods by which we arrive at opinion of value, and in doing so, we have three common methods. Number one, sales comparison method. This method focuses on getting accurate data on a similar property that was sold in the vicinity of your property to justify your opinion of value. And what am I trying to say? For instance, if you have a block of apartments, let's say a two-bedroom block of apartment, and one was recently sold for 200 million in the same building, you can use that to determine your opinion of value. But mind you, if necessary for adjustments to be made, you need to make necessary adjustments. Like for instance, if you have a 5 bedroom fully detached on 450 square meters, and there's another 5 bedroom fully detached on maybe 300 square meters, you see, you cannot 100% adopt the price. If the first one is sold for 800 million, you can't say the second one is 800 million because the land size is different. Therefore, the value will be different. And not outside that, you consider the features, the year of construction and all that. So comparison method cannot be 100% relied on. Therefore, you need to cross-check with some other methods. Then that takes us to number two, which is the cost method. Cost method focuses mainly on how much it's used to build this property. And most developers and investors use cost method to determine replacement cost. If I sell this property for XYZ amount, can I build another property of this quality with that amount? That is cost method for you. And to arrive at cost method, what we usually do is we get the total area of the property and multiply it by constructional rate per meter square to get the cost of the building. In some cases, some property have some equipment attached to the property, while they have some that are detached from the property. So some of it are the ACs, the kitchen equipment like gas cooker, heat extractors, and so on and so forth. All this will be considered while calculating, while getting your constructional rate per meter square. Then for the furnitures and every other things that are not attached to building, you get the value of those ones in the market as of today. Apply a reasonable depreciation percentage. In some cases, it could be between 5 to 10%. Then when you depreciate the building, then you add the land value. You will not depreciate the land because land does not depreciate. That gives you the cost of the property, and that is used to get the replacement cost. Number three, income approach. This method is used to value income generating properties like investment properties such as hotels, mall, um, block of offices, and so on and so forth, filling station, income generating property. The investors need this to determine whether the return on that investment is worth their investment. For instance, what will be the payback period? If I buy this property for XYZ amount, when will I get my money back? And is the data you acquire from the sales or from the rent you get from this property that is used to determine the the value of the property?